Everyone. On behalf of Reliance Securities, I welcome you to NBCC India 2Q FY19 earnings conference call. We are thankful to NBCC Limited for giving us the opportunity to host the phone call. From the management side, we have Dr. Anup Kumar Mittal, Chairman and Management Director, Ms. B.K. Soke, CFO and ED Finance, and Mr. V.K. Chaudhary, GM Finance. At this point of time, I hand over the floor to the management for opening remarks, which will be followed by a Q&A session. Over to you, sir.
Good afternoon, friends. This is A.K. Mittal, Chairman and Managing Director, NBCC. First of all, on behalf of NBCC, welcome all of you on this phone call after Q2 results. Incidentally, today is 58th foundation day of NBCC. Means NBCC has completed 50 years in operations after its establishment in 1960. In Q2, the revenue from operations as far as NBCC is concerned is about 1,541 crore against last year's 1,128 crore, means 36% growth in top line. And bottom line is profit after tax, PAT, is 85.96 crore against last year's 74.12. There is a increase of 16% in profit after tax. And today we have around 80,000 crore rupees outstanding order book, which will execute it in the next 4 to 5 years' time. And these are the few things on which we'll discuss during this phone call. Now I open the floor for question and answer.
Thank you very much, sir. Ladies and gentlemen, we'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone with a question may press star and 1. We have a first question from the line of Atul Tiwari of Citigroup. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity to ask questions. So my first question is on your EBITDA margins. So in this quarter, in the standalone entity, the company has reported 3.7%, which is quite a bit lower EBITDA margin year on year. And also usually lower than, 5.5% kind of margin that the company does on a full year basis. So what is the reason for the same, and what is the normalized level of margins we should be working with? This is my first question. I have a few others which I will come back.
Sir, this year actually the accounting norms has got changed. A new year...
sorry to interrupt, ma'am. Could you come a bit closer to the phone? We are not able to hear you that well.
Yeah. Actually, sir, I just want to bring into the light that from this year, some accounting norms has already been changed. A new Ind AS 115 has been implemented since the beginning of the year, which was controversial throughout the globe. Not only in India, throughout the globe, and it was deferred up to 2 years. That's what these controversies. Our company is having a great impact on the same, and we are unable to book some fees which was booked in the earlier regime. That is why earlier regime prior to the implementation of this Ind AS. But after implementation of this, we are not able to book that fee. That was some milestone-based income. We are unable to book it now. But since the previous number has not been regrouped, that is why you are seeing this type of thing, variations. Otherwise, there is no variation as such. The company is going equally good.
Okay, so ma'am, just to clarify that this milestone-based fee that you are unable to book, say, on a quarterly basis, it will flow through to the company's margins, after a lag.
We are realizing in cash, but we are not booking it as revenue. We are realizing in cash. There is no doubt about it. But it shall be booked over the period of the project. Since our project lasts for at least 2-3 years to be executed fully, so based on the percentage completion, it shall be booked over the period of the life of the project.
Okay, so there is no reason to assume that the medium-term kind of margins have fallen.
Absolutely no reason to worry about it.
Okay.
Income is available, classified in advance revenue.
Okay, okay, sir.
Is shown in the balance sheet as an advance receipt. But we will book in the profit and loss account on the POSM basis.
Okay, sir. Thank you, sir. Thanks for clarification. And, sir, the second question is on the status of the Delhi redevelopment projects. What is happening there? When can we expect the restart of construction? And an associated question is, your revenue guidance for FY19, the absolute number. I think we started the year with 9 to 10,000 crore rupees of absolute revenue that we would book. So are we on track to book that number? So these are the two associated questions.
See, as far as Delhi redevelopment projects are concerned, the High Court has approved two projects, Netaji Nagar and Sarojini Nagar, out of three projects which were allotted to NBCC. And physical work on these two projects will start sometime in January 2019. And from that month, we'll start booking of revenue in these two projects. As far as third project is concerned, that is Naroji Nagar, the court will give their verdict on 28th of November this month. And I hope that that will also be cleared from court. And from December onwards, the revenue booking will come from that project, because that project was already, commenced, and substantial work was done by NBCC. So this is the status of these three projects. As far as guidance of for revenue in this financial year is concerned, in the beginning of financial year, we gave the guidance of 30 to 35% growth in this financial year, and we are quite sure that we'll maintain that. And if you see the results of the company in last two quarters, the top line has grown 30 to 36%, and there is a total how much in half yearly? Half yearly there is a growth of 33.13% in this financial year. So we are quite sure that similar growth you will see by end of financial year.
Okay, and so my last question is not being able to consolidate Hindustan Steel Construction. So what, can you give some more color why the financials were not available to you? And it looks like that still NBCC is probably not in full control of that company. So, can you share some more color on that aspect?
See, there is no reason to say so that NBCC is not in full control of HSCL. The reason why we could not consolidate the accounts in this quarter is there are two reasons. Initially, government decided to shift the headquarters of the company from Calcutta to Delhi, and but due to historical reasons and HR issues, we could not shift that headquarters, and that is the reason there is some small HR or IR unrest in the company for 15-20 days. So now that has been sorted out. So in quarter 3 we'll prepare the accounts, and the accounts will be consolidated.
Okay. Thank you, sir. Thanks a lot.
Thank you. We'll take the next question from the line of Ashutosh Charya of SBI General Insurance. Please go ahead.
Hello.
Hello.
Yeah. So just wanted to, I have two questions. Firstly, on can you just brief about the status of Amrapali, what is going on there?
You see, Amrapali, the Supreme Court has asked NBCC to complete these projects. So we were, you can say that officially NBCC has been engaged as project management consultant to complete all those projects. And same time, court said that the money required for completing these projects will be provided by the developer or court, and the court is hearing the matter and finding the ways how to finance these projects. That is one thing. And same time, court directed NBCC to go ahead with the floating of tender and fixing the agencies for completing the project. That activity we have started. And out of total 16 projects valuing around 8,000 crore rupees, we have floated 10 tenders, 10 projects. And for remaining 6 projects, the tenders will be floated by end of this, this month. So by end of January, we will be ready to start the projects. And we hope that by the time, court will also be in a position to find the ways how to finance these projects.
Okay. So we haven't booked any revenues from Amrapali, right?
No, no revenue from Amrapali.
Okay, okay. So my second question was, there was a news article regarding you buying JP Infra. So could you just throw some light on that? Are we going to do the PMC type of work there, or are we going to own the assets?
You see, the NCLT has floated the expression of interest for taking over this company. EOI was there. So NBCC has just shown the interest in participating in that process. That is the present status of NBCC's involvement in that company. It means that we will not only do the project management, will take the control of the company. So, but yet we have not decided. It's only expression of interest. There are a number of other steps. Once those are over, then only we will decide that whether we have to participate or not in that process.
Achha. So, so you will be owning the projects, right?
Yes.
Okay, okay.
Including their assets.
Yeah.
Primarily, we are eyeing on their assets that includes expressway and around 3,000 acre land right from Noida to Agra, and mainly around the new airport which is coming up in Jewar, Noida.
Okay, okay. So how much valuation you have prima facie seen in this project of JP Infra? Could you just tell us?
No, we are not aware of the details because the IRP has not given us the all data. That will be available only once they open the data room, probably on 4th of December onwards. Then only we will be in a position to find the value of the asset and liability and other things.
Achha. Okay, okay, okay. Okay, that's it from my side, sir. Thank you, sir.
Thank you. Our next question is from the line of Dikshit Doshi of Whitestone Financial Advisors. Please go ahead.
Yeah, hello. Thanks for the opportunity. Just, sir, you mentioned about the Netaji Nagar and the Sarojini Nagar that court has allowed us to go ahead with these two projects. But according to the news article, I understand that we have to avail the fresh environment clearance and other clearances. Is it right?
The court has said that you go ahead with the project, and if any fresh approval is required, for that, we have to go again to those statutory authorities. Specifically, court has not directed us to go to authorities for fresh approval.
Okay, so we already have all the approvals, right?
Whenever we have approvals, we are not supposed to go to authorities again. In case any changes are there, and as per the law, we have to go for fresh approval for those changes. In that case only, we will go to court, statutory authorities.
Okay, so we can start from January in these two projects.
This is what I said.
Okay. Secondly, sir, in terms of HSCC, if you can give us how much money we are going to pay and what is the current order book, and if you can give us the FY18 numbers of HSCC, because there was no annual report on their website.
You see, HSCC is a company that company was under Ministry of Health. So the company is doing business in health sector, means construction of hospital, medical colleges, AIMS, etc. in India as well as in abroad. And today that company, on 1st of April 2018, the order book of the company was around 9,000 crore rupees. Last year the company has done around 1,500 crore rupees revenue, and their profit was approximately 75-80 crore rupees. I think they have not finalized their accounts yet. Those are not cleared by statutory authorities, but approximate figure is so. And this year, the company is planning to do around 1,600-1,700 crore rupees revenue, and accordingly profit will be there.
Okay, and from when this company will be consolidated in our books?
From Q3, the results of that company will be consolidated with NBCC.
Okay, and it's a 100% stake, right?
100% stake. The company's net worth is around 200 crore rupees, and that is in the shape of cash only, not in the shape of property or any other means. It's 100% cash they have in terms of net worth.
And how much we paid for this?
285 crore rupees.
Okay. Secondly, sir, if I see your consolidated accounts, the revenue was 1,465 crore. So if you can help me that why the consolidated revenue is lower than the standalone revenue.
You refer the note number 7 in the balance sheet. Have you read it?
Yeah, HSCL part, right?
Yes, that has not been consolidated in this.
No,
I have already replied the question related to this. That was first question, probably.
Okay. And just last one thing, I just wanted your thoughts on it. So, we as a PSU, we always have a full hands in terms of order book from redevelopment to state government orders to railway station work, everything. So, why company is planning, to try our hands in these 6 companies like Amrapali and JP project, and why not we are more focused on government orders only?
See, in case of Amrapali, when court asked NBCC to complete these projects, and we thought that if we get 10 to 11% agency charges from these projects, and these projects can be started immediately because these projects are not greenfield projects, these are running projects. So it's very easy to get this money. The 8,000 crore rupees orders we are getting through court, it's not, we are not taking money, or we are not agency to Amrapali. In a way, you can say we will be agency to either government or through Supreme Court. So it's not that we are working for Amrapali. So that's why we thought we should do this work. And if we get 8,000 crore rupees order, which is required to be completed in 3 years' time, and we'll get more than 800 crore rupees piece. So why we should not do? And as far as JP is concerned, similar situation is there. In JP's case also, they have huge amount of land around airport. They have expressway from where every year they are getting more than 300 crore rupees toll at the moment. But after a few years, once the airport will be functional, this amount will increase. And when government is also thinking to go for affordable housing, so that's why we thought that we should try in JP also. But in any case, we will not do any business which is not, profitable venture for company, and without any litigation, and will not work for any private company.
Okay. Thank you. That's it from my side.
Thank you. Our next question is from the line of Prem Khurana of Anand Rathi. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my question. So just want to understand a little better this difference between consol numbers and standalone numbers. So consol happens to be somewhat lower than standalone. So I understand we have not consolidated HSCL during the quarter. But then, even if I were not to consolidate, why would the numbers be lower than standalone? There's a difference of...
I request you please go through the note number 7 of the financial statements, and you will see that the same growth which has been shown in standalone number approximately 36%. If we will go through that note and we'll see the comparable figure, because we have clearly mentioned the figures due to non-consolidation is non-comparable. However, comparable figures has been disclosed in the note number 7. Please go through that and your doubt will be clear.
Sure.
All the growth rates has already been retained.
Okay. Sure. And the second was basically, I think when we started this year, we want to give out 15,000 odd crore rupees of orders. So how much of this is already awarded now, and what is the plan for the second half?
You see, out of 15,000 crore rupees, I think we have already awarded 7,000 crore rupees orders in this financial year.
Okay. Sure. And the remaining 8,000, we stick to the number that we started with, right? So 8,000 odd is what we're planning to give out in the next half.
Yes, maybe 8,000 or maybe 4,000 to 5,000, because some of the projects award will take place in first quarter of next financial year.
Okay, so the range would be anywhere between 11, 12 to 15. If you somehow get to have these in place, 15 is the number. Sure. Yeah. Okay. And so just, on this other income this quarter, there's a significant jump in our other income on a sequential basis. Last quarter in standalone entity, we did 38 odd crore rupees, and this quarter it is around 64. So what would explain this jump, and is it sustainable number or there is any one-off in this number?
Yeah, it's a sustainable number because in our company model, we have in redevelopment projects, we are giving seed money. So seed money until the project is coming on the ground and is completely sold and all the money is returned to the government, our investment is very good invested there, and we are going to earn that interest which has been shown as a growth in the other income.
Sure. So how much is the seed money that we've invested in all these redevelopment colonies?
Around 850 crores.
850. And ma'am, if I have to understand this correctly, this is only, the booking that you've been doing as of now, it's only accrual-based booking, right? So we're not receiving any money because the projects are yet to start generating any significant amount of cash flows, right?
Yeah, we have received the interest amount up to 30th of June. This is a realized amount. Realized profit only for this quarter it is standing.
Okay. And our cash balance seems to have gone down over the last 6 months. So is it essentially because of the money that we've invested in redevelopment colonies, or there's some...
Yeah, you're right.
Sure. Okay, sure. Thank you. That's it from mine.
Thank you. Our next question is from the line of Ravi Naredi of Naredi Investments. Please go ahead.
What will be our target for current financial year? Can you give some idea how much our order book today and what is expected to execute by March 19?
You see, today order book is around, outstanding order book is 80,000, and I expect by end of this financial year, this order book should be around 1 lakh crore rupees. That is one. As far as execution is concerned, we are expecting that the growth in revenue from the execution will be 30 to 35% in this financial year.
Over the previous year?
Yes.
But still in 6 months it is not looking. Are you aware about it?
Sorry?
In 6 month result it is not showing 32% growth. So are you sure it will come by March?
No, in this half yearly, if you see, in 6 months, the total 33% growth in top line.
How it is, sir? Because in the data it is not like that.
Please read that. Net sales and income from operation in this financial year till date is 3,200 crore rupees.
And last year it was 2868.
2,400 crore.
It is showing 2868.
No, that is consolidated figure. Note 7 you refer that.
Okay.
But as far as NBCC standalone is concerned, 3,200 in this last 6 months, and last year 2,400. So there is a growth of 33% till date.
Okay. And sir, how is the current order? It is okay. Okay, okay. Bye, sir. No, I am not getting it, but I do not want to waiting here. So just I see, and then if anything is not come. Okay.
Thank you. Our next question is from the line of Rohit Natarajan of Antique Limited. Please go ahead.
Hi, thank you for allowing me to ask these questions. Sir, if you could just give us some details on this JP Infratech deal. I thought it was Amrapali like PMC model where we will be not getting exposure to the assets. On the contrary, we will be just earning fees. Because this JP Infratech deal also involves this debt to be paid. So how are we going to finance all those things?
It all depends whether we will give our proposal with paying of debt or not. You see, it's a case under NCLT, and we have to give our proposal to IRP, and it's not necessary that our proposal will say that entire amount we will pay to debtors, creditors, banks, or whosoever is there. So it all depends what proposal we will give. So it's not like that pura ka pura paisa hum de denge.
Okay. I appreciate that, sir. And that would mean that based on the proposal, the bankers and the IRP professional will take a call and the project will be awarded.
We'll try to take advantage of our position because what we feel that we are the only agency available, at least in this area, who can give confidence to buyers, 25,000 buyers, to give them completed houses. That is prime responsibility of everybody, including bankers. So our proposal will be based on that. So it will be all depending on our proposal कि कितना हम लोग उनको पैसा देने का बात करते हैं.
ठीक है सर. And sir,
how much banks agreed to take haircut in this case?
Okay, okay, I got it, sir. So we'll have to wait further for the details. Based on that, we can.
You have to wait till our proposal is submitted and opened by IIFE.
So when will?
But rest assured that our proposal will be in the interest of the company as well as investors.
Sir, what is the timeline that you expect this particular?
Timelines are already available on their website. And if I am not wrong, on 5th of January, we have to submit our proposal.
Okay, okay. I got it, sir. Sir, in terms of the situations of this contracts awarded, we had the plan of 15,000 crore to be awarded this fiscal. So what is the status over here? What is the cumulative awarded position to the contractors look like?
See, till date, we have awarded around 6,500 crore to 7,000 crore rupees worth to different contractors, and the remaining period, another 4,000 crore rupees worth will award, and balance 3,000 or 3,500 crore rupees worth will be awarded in first quarter of next financial year.
Okay, okay. So that's it from my side, sir. Should there be any other questions, I'll get back into the queue.
Thank you very much. Ladies and gentlemen, we would request you to please limit your questions to one per participant, as we have a long queue. We request, time permitting, you may come back in the queue for a follow-up question. We'll take a next question from the line of Dipen Mehta of Elixir Equities. Please go ahead.
Yeah, ma'am. You mentioned earlier in the call that the reason for the drop in the EBITDA margin was because of adoption of Ind AS 115. But if you look at Note 8, it says that because you accepted AS 11, had you not accepted AS 115, your profit would have been lower by 23.45 crores for the quarter. So it doesn't make sense.
Yeah, rightly said. It was for the real estate segment, sir. But
can you please speak up, madam?
See, the disclosure note is about the real estate segment, wherein we are able to book the revenue, wherein we were booking the revenue on POCN basis earlier, and right now we have to book on the completion of completion.
No, it's not real estate, madam. It mentions over here, it is contracts with customers, so it is the project management.
Sir, but all the calculations we can do, because we have mentioned in the note that we have applied the standards from 1st April. We have not regrouped our previous numbers. That is why it has been applied prospectively, not retrospectively. This clarifies the issue. Because
no, it doesn't clarify the issue. It doesn't clarify the issue, madam, because it says that your profits would have been lower by 23 crores. So already the profits are lower, and you are saying the profits are lower in the PMC business because of acceptance of Ind AS. So had you not done Ind AS 115, your profits should have been higher. So it doesn't make sense, madam.
Because PMC revenue milestone base has not yet been billed to the customers. That is why.
So shouldn't you be giving us some sort of a comparison? I mean, there's a drop of almost 75 crores in the PMC EBITDA. I mean, we need an explanation for such a huge drop in the PMC revenue. Some comparable, something or the other should have been disclosed, no? Because this is giving a very wrong picture.
Yeah, actually there was some revenue which was booked in the earlier regime in the corresponding quarter, which has not yet been booked, which cannot be booked as per the new accounting norms.
No, you're repeating yourself. The fact is that has to do with revenue. You're repeating yourself, but the fact of the matter remains that there is a drop of 70 crores in the PMC revenue. On a 6-month basis, the drop is about 160 crores or so.
There is a drop in the PMC revenue.
PMC EBITDA, 340 crores to 181 crores. These are material numbers.
You see, as far as that number is concerned, that is the stage payment which we received last time in corresponding yearly, 6 months from the projects. For example, if we prepare the DPR, and there is a provision in the contract that you will get 2% against the DPR out of total 8% fee that was booked in last financial year. That was for the projects, large value projects like Netaji Nagar and Sarojini Nagar. But in this financial year, there is no such project available from where we can book 2% revenue against the DPR preparation. That's why you are seeing this difference of EBITDA margin in the revenue as well as the EBITDA margin.
What you are saying, in fact, is that the PMC margins are significantly lower irrespective of accounting in this fiscal year.
No.
Because you said that we are getting 2% upfront in Netaji Nagar and other things. So that was unusual income which came in the previous quarter. It is not there in this quarter.
You see, from this financial year, we are not booking that amount in our books. We are taking that amount as advance. That's what, it's not being reflected here.
Okay, I am not completely satisfied with your answer. Optically, it appears that there is a huge drop in the operating profit margins, and unless the management is able to explain in proper comparison, sir, with that doubt will remain in the minds of the investors.
You see, your team can separately discuss either physically or over telephone.
And second question, sir, is that, Madam said about this, referring to note number 7, for lower than consolidated revenues being lower than standalone. But even in note number 7 only says that had you added Hindustan Steel Works, then this is the position, okay. But this still doesn't explain why the consolidated revenues are lower than standalone revenue. Consolidated total income is 1465 crores and standalone is 1647 crores. And all that note number 7 explains is that had you added Hindustan Steel Works, then this is the picture. But it doesn't explain why the revenues are lower.
It's not about had we added the Hindustan Steel Works. It's about had we exclude Hindustan Steel Works in the comparable figures. So it's not about if we include, but if we exclude it from the comparable figure of the last quarter as well as for the last half year, then the growth will be seen. It's not about, because right now I am not available with the number, how I can add that.
Yeah, so therefore you have...
So I can exclude the number from the comparable number, that is 30th June 2018, and you will appreciate this fact that the quarter number is the deduction between the half-yearly number and the quarterly result up to June. That disclosure has already been given in note number 9, sir. You can see how the quarter number has been arrived.
And many questions are there. I only appreciate if you could just, prepare a more detailed analysis of what we have reported.
Yeah, your team can comment separately.
And lastly, sir, I just want to correct you. Actually, the growth is just 13.5% on a consolidated basis and not 30%, sir, in terms of revenue, if you see. The consolidated revenue...
39.20% growth is there on the comparable number in consolidated results. 39.20% growth is there, sir, on quarterly basis, Q on Q.
Mr. Mehta,
maybe
please request you to return. Thank you. We'll take the next question from the line of Viral Shah of MK Global. Please go ahead.
Hello, sir.
Yes.
Sir, in terms of Amrapali project, what will be our scope of work and what will the fee, what will be getting?
Amrapali project total value is around 8,000 crore rupees and our fee is 10 plus 1, 11%.
1% is the fee
for the inventory which will sell.
And that can be booked upfront, right? It is similar to Nauroji Nagar and Nauroji Nagar.
Correct.
Secondly, in terms of any sales which you have taken for Nauroji Nagar during the quarter or during first half?
No sale in this quarter.
No sale during the quarter.
Because the issue was pending in the court, so we were not allowed to sell that.
Okay. So when do we expect this sale to pick up?
That sale will pick up from last quarter of this financial year.
Okay. And so finally, the Pragati Maidan issue is solved, right? And everything, the construction work has started back at Pragati Maidan.
Yes, Pragati Maidan, we are on track.
On track. Sir, what will be the loss of revenue for that for the third quarter per se?
Sorry?
What will be the loss in terms of revenues or number of days where Pragati Maidan work was done?
I think there should be around 30 to 40 crore rupees for 1 month time. And we'll try to make up that because we have strict guidelines and timelines from the government that we have to complete this project by the date which we have committed.
Agreed. So, because of this ban, there is no possibility of delay, right? Because...
No.
Oh, no. And still the guidance remains of completing the project 1 month ahead of schedule?
No, I don't think that will be possible now. I think now this will be completed by end of the scheduled date.
Fair enough, sir. Thank you so much and all the best.
Thank you. Our next question is from the line of Shubham Mishra, an individual investor. Please go ahead.
Good afternoon, sir. Thank you for giving me the opportunity for asking a question. Sir, there is one question from me that have you started the redevelopment projects, the station redevelopment projects of Goa, Tirupati and Puducherry, which you are looking to start by the end of this fiscal year?
Which one?
Sir, the station redevelopment project in Goa, Tirupati and Puducherry. What is the status of that?
Till today, we have started 2 projects in Lucknow, Charbagh and Gopinagar, and third project, Tirupati, is already finalized, but we have not started physically there. And Pondicherry project, we are now floating the tender in the next 2 to 3 days. And Goa will be after 1 or 1.5 months.
Okay, so by the end of this fiscal year, FY19,
yes.
So we will be able to start all the redevelopment station projects. Yeah. Sir, what is the status regarding that Vadala project of the finance district?
Vadala project, DPR has been finalized, agreed by government. Now the proposal is going for financial approval from Finance Ministry and Cabinet.
Okay. That's it from my side. Thank you very much. Thank you.
Thank you. Our next question is from the line of Priyankar Viswas of Nomura Securities. Please go ahead.
Good afternoon, sir. My first question is on, you were mentioning about milestones, I mean, as regarded to PMC, like how the margins will be booked. Can you just tell me what exactly are these milestones, like on basis of which you will be booking this PMC margins?
You see, for your consumption as well as the person who was asking this question and he was not convinced, let me explain this to you that as per the contract with some of the client, now after 2017 March with almost 70 to 80% client, it has been agreed that certain amount of fee will be paid to NBCC in advance once we prepare the DPR and that is approved by them. That is around 30%. So it means that if we are charging 8% fee, around 2 to 2.5% fee will be paid to NBCC even before start of the project. That was the case from the 1st April 2017 or before that. You see, that we were booking in our revenue as well as in our books. But from 1st April 2018 onwards, as per the new accounting policy, the policy says that you cannot take that in your books of account. However, NBCC can take that amount as advance received from client from that project. So that's why everybody is questioning, and that is right also. But the difference between last year and this year is we are getting that amount, but last year we were booking that amount in our revenue as well as in our profit and loss account, whereas in this financial year onward, we are getting that amount, but we are not booking our revenue and we are not counting that in our profit and loss. That's why you are seeing a difference between last year's EBITDA margin or profitability versus this year.
So if I understand this correctly, so till the milestones are reached, so more or less the revenue and costs will be same. And so once milestones are achieved, so you will have a suddenly lumpy recognition of these margins. So like when this is recognized, so the margins can potentially shoot up in that particular quarter. Is the understanding right?
You see, that is the case for this financial year only, because you are comparing these things with respect to last financial year. But henceforth, in all the quarters, every month, the revenue recognition as well as profit and loss is concerned, that will be stable and that will be based on the work done and fee charge on that. And whatever milestone say, that money will take as advance, but it will not reflect in our profit and loss account. So this will not be lumpy, balance sheet. This will be a stable balance sheet. However, if you are comparing with last year balance sheet, of course, it will look like this. But after end of this financial year, when you start comparing year on year or quarter on quarter basis, it will not look like this.
No, sir, I didn't mean it that way. So what I meant was, right now the margins are showing like 3.9, 3.7 because the cash that you are receiving is going into the advances.
Advances. But that is not coming in our profit and loss.
So let's say by 3Q or 4Q, let's say you reach a certain milestone. So
right.
Then this advances may be recognized into the P&L.
Yes, that will be covered.
The margin can go up.
in
that particular quarter.
You see, that margin...
That particular quarter.
No, it's not, that simple. You see, the process is, suppose we have 1,000 crore rupees contract, and that we are completing in 1 year time, and every month we are doing 100 crore rupees work, and our fee is 8%, we get 8 crore rupees fee every month. Right? But whatever we have received as advance on the basis of milestone will be adjusted against the 8 crore rupees which we have to receive in that particular month.
Okay.
So, for example, 1,000 crore rupees ka kaam mila hai, 80 crore rupees fees hai, 25 crore rupees is, say, that milestone figure that we receive as advance, but that will not be recognized as revenue or profit and loss in any month. That will be adjusted against our receipt of every month's agency charges.
Okay, understood. So, let's say, so if this impact was not there, let's say, so how much higher could the margin have been? So, like if we were to adjust this impact, like if it was in the older standard, so how much higher could the margin have been this quarter?
You see, when we have not calculated that, it's difficult to answer that question right now, that we can calculate, but that is a totally hypothetical exercise, because now, you see, when we are getting a stable fee on the basis of the work done, so it's a very simple process. So it's, unnecessary requirement of doing this exercise, so there is no point of doing that.
Okay, sir, that will be all from my side.
Right.
Thank you. Our next question is a follow-up from Atul Tiwari of Citigroup. Please go ahead. Mr. Atul Tiwari, you may go ahead with your question.
Yes, sir, sorry. Sir, how much has been the order inflow for current financial year to date?
Around 10,000 crore rupees.
Okay. Thank you, sir.
Thank you. Our next question is from the line of Utsav Mehta of Edelweiss. Please go ahead.
Hi, good afternoon, sir. Just two questions from my side. One is just to understand the design revenue bit clearly. So you've recognized 2% last year, which you were unable to recognize this year. Does that mean when these projects go for execution, you will be able to recognize only 6% as gross margin on these projects?
Yes, you can say so.
Okay. And my second question was, sir, there's a significant jump in other current liabilities on the balance sheet. Just wanted to understand what the reason for that is.
Yeah, sir, whatever revenue we have recognized earlier, that has been reversed on the application of Ind AS 115, for which a due disclosure has already been given in the notes to account. And approximately 300 crore revenue was reversed, which was recognized earlier on the POC basis in real estate segment, and approximately 700 crores in PMC segment. That is why there is a jump of approximately 1,000 crore in current liabilities.
Okay, but I thought that the impact of Ind AS 115 on the design revenue wasn't applied retrospectively. It was just applied for this year.
Yeah, it has not been applied. It has been applied on 1st April 2018, giving all the retrospective adjustments, but the last year's figure has not been restated.
So then, just to circle back to my earlier questions, when the actual execution comes, we'll again recognize only 8%, or will it be 6%?
8% will be recognized, 2% shall be adjusted from this. Whatever adjustment has been done in the retained earnings.
Okay, understood. Thank you.
Thank you.
Thank you. Our next question is from the line of Vishal Gajwani of Birla Sun Life. Please go ahead.
Hi, good evening. My question again was on PMC business margins. Of course, I understand the impact of Ind AS, but what kind of steady-state margins one should expect going forward?
Can you speak loudly?
Yeah, the question is on margins on project management consultancy. Considering the change in accounting standard Ind AS, what kind of margins in PMC one should expect going forward?
You see, in PMC, this year we are showing 6.53% margin, gross margin, against last year's 7% margin. So this will be in the range of 6.75 to 7% margin in coming time.
Okay, sure. Thanks a lot.
Thank you. Our next question is from the line of Parvez Akhtar of Edelweiss. Please go ahead.
Hi, good afternoon, sir. Couple of questions from my side. Sir, of our overall order book of 80,000 crore, how much will be the orders in the self-revenue generation category?
50%. 50%.
Sure. And of this overall order book of whatever 80,000 crore, how much have we till date awarded to contractors? I mean, not just this year, but of the overall order book, how much has been awarded?
I think 38,000 to 40,000 crore rupees.
Okay. And sir, lastly, in the Delhi colonies, how much have we sold till date?
2,700 crore approximately.
Okay. And so fiscal?
Sorry?
What is the target for the next 6 months in FY20?
You see, in this financial year, till December 2018, we don't have any plan to start the sale from these, these properties in Delhi. We'll start selling the property from 1st of January.
Okay. Sure, sir. Thanks. That's it from my side.
Thank you. Our next question is from the line of Himanshu Shah of Potentiality Unlimited. Please go ahead.
Good evening, sir. Yeah, I have a question related to an amount pending with the EPFO, which is more than 400 crore rupees.
ESIC.
Yeah, the Labour Ministry. And
yes.
What is the status of that, sir, now? Because it's been lying there for many, many years now.
You see, earlier this was around 600 crore rupees. Now it had reduced to 400 crore rupees. Now all the projects have come to a stage when we can say that projects are completed. So I expect by end of 2019 calendar year, all the, these debtors will be cleared.
Okay, and we are accumulating any interest on that, sir?
Yes, there is a provision of interest, but we are not taking that interest amount which we are claiming into our profit and loss account, but definitely we are claiming that.
So that will be added by that time.
Yes.
And is it okay? Fine. There's one more question, sir. How do we look at the buyback compared to the money that we keep for earning interest or lying in the books? As a company, do we look at the buybacks really positively?
You see, you have just raised the issue which we are discussing in-house since last 48 hours. And we have not concluded this subject. But definitely we are also exploring the possibility and seeing that pros and cons of buying back and putting money in banks. But definitely we need some money for investing as seed money, because that is the reason why our clients are giving works to NBCC, because they don't have money to invest in the project. That seed money definitely we require, but we are also exploring the possibility of buying back some amount of shares.
Sir, because a company like ours, which is generating free cash, can really create a lot of per share value by actually buying back the equities of shares from the
You are absolutely right. Even we are thinking beyond that. If we have to take some kind of debt to buy back the share, that will be much, beneficial for company and stakeholder, because ultimately if we take money at the rate of 8%, it will cost only 5% after deducting the tax and other issues. And the buyback will be definitely better than, investing money other places.
Right, sir. And one more question, sir. We have been mentioning the 80,000 crore order book for last now 3-4 years. And we have added a lot of orders, much more than what we have executed in the last 3-4 years. So where are we holding back on, mentioning a higher number that we might have,
Yes, you may be right partially, but
yes.
There is another point that you see, when we were saying 1.5 years back or 1 year back that order book is 80,000 crore rupees, that was inclusive of other taxes, indirect taxes. But now our revenue recognition is without indirect taxes. So we have also corrected our order book by reducing that 18%. So if you, talking in terms of last year's order book, today's order book is about 1 lakh crore rupees.
Sir, okay, sir. Fine, sir. And just one more question. We have a lot of physical assets in terms of real estate that we can sell and raise money.
Right.
Is there a plan that we can focus on that area just to raise money? I mean, not to be a part of the real estate business and do something about it.
You see, we don't want to sell those properties desperately. So we are looking for right opportunity to sell those properties. But definitely will not sell those properties on lower rate expected amount. But in this financial year, we have sold in the last 6 months around 200 crore rupees inventory.
All right, sir. Okay. Thank you so much, sir.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I would now like to hand the floor back to the management of NBCC India Limited for closing comments. Over to you, sir.
Thank you, friends. In case, because of shortage of time, if we have not replied your questions or still you have some queries, you are welcome to contact our Investor Relation Division in person or through mail or telephonically, and we'll be happy to answer your all queries. And we are also planning to hold investors conference or brokers conference in Mumbai in next fortnight, and we'll try to address all your queries here. And wish you all the best. Thank you.
Thank you, members of the management.